When it comes to wholesaling and flipping, when you do a deal on the day of closing, the title company that is handling the closing transaction is going to provide buyer and seller a closing statement. And it breaks down all of the numbers. Now, understanding that closing statement is really important. So on today's video, using actual closing statements, get ready to learn how to read a closing statement. Coming up.
This video is brought to you by 10K Club, a program that pays you $10,000 for finding ugly houses. Learn more at my10kcheck.com.
If you're new here to this channel, I'm Jerry Norton with FlippingMastery.com, and this channel is all about ways to help you make money wholesaling and flipping real estate so you can live your dream life. Be sure to subscribe and turn on the bell notifications so you don't miss new videos. When a real estate transaction happens and the property changes hands from the seller to the buyer, this is referred to as a real estate closing, and there is a closing company that will conduct the transaction and facilitate the actual transfer of ownership from seller to buyer. Now, depending on the state, it could be a title company, escrow closing company, or some states require by law that attorneys close real estate transaction. Here's a map showing which of the three is used in each of the states. Now, if you're ever unsure, just do a simple Google search to find out. The closing statement is a key step in the real estate investing process, especially with wholesaling and flipping, since that is when we make our money. If you're new to buying and selling real estate, then once you do a deal, just prior to closing, the closing company will prepare and give both buyer and seller one of these. It's a closing statement, or what's often called a settlement statement. Now, this shows the sale price and a breakdown of the fees and expenses for both buyer and seller, as well as funds needed from the buyer to close and the exact proceeds going to the seller. And if you're unfamiliar with the closing statement, it may be confusing to understand at first. The reason why it's so important to know how to read the closing statement is not just so you see how much the buyer needs to fund the purchase or for the seller to see what his exact proceeds are, but also to make sure that there aren't any mistakes made by the closing agent and to make sure you're not paying fees you shouldn't be paying. And that's why it's important that you not only know how to read the closing statement, but that you also understand all of the different fees associated with buying and selling a property. Now, if you see a fee on the closing statement and you have no idea what that fee is, then find out. Ask the closing agent. Whatever you do, don't just assume it's a legit fee or that you should be the one paying it. Closing agents make mistakes all the time, and they assign the wrong fees to the buyer or seller. That's why, along with this video, I want you to watch another video I did where I break down all of the fees to buy and sell a property. So I promise you'll watch that video right after this one because it will really help you understand the different fees on a closing statement and who is supposed to pay them. Now, I'll put the link to that video in the description below for you to watch later. Bottom line, as an investor, you need to know what it costs to buy and sell houses in your market as it varies from state to state. That way you can account for those fees when doing deals. By the way, even if you're a wholesaler and you do single closing assignments where the closing fees are paid by the seller and your cash buyer, you still need to understand what the fees are and how to read the closing statement, not just to make sure that your assignment fee is accounted for and properly on the closing statement, but as a wholesaler, since those fees are going to be paid by the buyer and seller, you have to factor them into your numbers when negotiating on price. Not to mention, sooner or later, you'll have to do a double closing where you do pay the fees. So this video applies to wholesalers as well. And just so you know, there isn't a single boilerplate closing statement form that everyone uses. However, the closing statement form developed by the American Land Title Association, also called ALTA, is widely used across the nation for real estate transactions and is the most common closing statement used. So let's take a closer look at a blank ALTA closing statement. This works much like a balance sheet organized into debits or expenses and credits or increases. An easy way to remember it is a debit would be a subtraction and a credit would be an addition. So taking a look here at the top here, you'll see three main columns: seller on the left side, description in the middle, and buyer on the right side. Under both seller and buyer, you'll see two columns, one called debit and the other credit. So it starts with the agreed upon sale price, and then debits and credits are applied to both buyer and seller, and then all of the numbers are added and subtracted at the very bottom, and that's the amount that's due from the buyer and the amount that's due to the seller. Now let's talk about the description. There are basically 9 different categories to account for all of the possible credits and debits on a real estate closing. First is financials. This details the price the buyer is paying and lists all of the items that may be credited or debited against that price. Next is prorations or adjustments. This covers for property or school or county taxes and HOA fees due for the period leading up to the time that the buyer takes ownership. Next is loan charges from a lender if there is financing involved on the purchase. Next is what's called inbounds. Now, many lenders require that fees are escrowed and paid to cover things like taxes, insurance, etc. Next is title charges or escrow fees. This covers all the fees charged by the closing company to handle the transaction and close the deal. The next category is commissions. This refers to real estate agent commissions, which are typically paid by the seller. Next is government recording and transfer charges, which are fees levied by the county, state, or municipality for recording the deed and mortgages of the new owner. Okay, next is payoffs. There's a good chance that the seller owes money still to a lender and will need to pay off the existing balance owed. So this section outlines those amounts and any associated fees or charges. And finally, miscellaneous, which would cover anything not previously outlined. And in case you're wondering, on a wholesale deal where you're doing an assignment, that fee is typically under the miscellaneous section as a line item, and it's on the buyer side as a debit or subtraction since the cash buyer is the one who pays it. At closing, title would cut a check or wire the wholesaler the assignment fee. So let's take a quick look at a few actual closing statements so that you can see this in real life. Let's start with an easy one first, and that would be a cash closing statement. Now, this would be if the buyer is paying cash, and since there is no lender involved, there aren't any loan fees to account for on the closing statement. You can see on the left, it shows the price of $50,000 as a credit or addition to the seller, and on the right, it shows $50,000 as a debit or subtraction from the buyer. Everything following this now is either adding to or subtracting from what the buyer will pay and what the seller will receive. So next it's showing the earnest money that was paid of $500, and this would be a credit or in addition to the buyer since it's paid in addition to the price of the property. Next are prorations of property taxes. In this case, the seller needs to pay the buyer some prorated taxes, so you'll see a debit or subtraction of $117 from the seller and a credit or addition of $117 to the buyer. Next, you'll see this whole section of fees right here that all have to do with paying the closing company for doing the transaction, as well as doing the title work and title insurance and other things like recording fees. So notice a closing fee of $300 paid for by the seller and no closing fee paid by the buyer. And notice a $315 title fee paid by the seller and only a $105 fee paid by the buyer. So on this deal, the seller paid most of the closing fees. These total up to like $900 in closing fees that the seller had to pay and only $145 for the buyer to pay. And again, in case you're wondering who pays the fees, every state is different as to who normally pays the fees. But remember, the contract always supersedes normal customary practices. So if the contract says buyer to pay all closing fees, which is common for wholesaling, then this list of $900 fees would be on the buyer's side as a debit or subtraction and not the seller. But in this case, it wasn't, so the seller paid those fees and has a debit or subtraction of approximately $900 in closing fees. Okay, finally is commissions. On this deal, the listing agent also represented the buyer, so he got both sides of the commission, so there's only one commission fee being paid. And remember, the seller pays the commissions, so $3,500 in commissions is a debit or subtraction from the seller. So now let's look at the bottom line for both seller and buyer. For the seller, on the credit side, he has a total of $50,000, and if we add up the debit column, he has a total of $4,511.62 in fees that are subtracted. So his net proceeds due to the seller are $45,488.38. And for the buyer, the debit or subtraction column adds up to $50,145, and the credit or addition side is $617.12. So the difference due from the borrower is $49,527.88. Okay, let's look at another closing statement that is a little trickier with a lender involved. This is a good one if you ever fix and flip and use hard money to buy the property. So here's the price of $78,000 that it shows as a credit or addition to the seller and a debit or subtraction from the buyer. Then it shows the $500 earnest money as a credit from the buyer. And then check this out, $149,700 credit to the buyer in the form of a fix and flip loan. This loan covers money to buy the property plus rehab funds. So then there's a small property tax proration of $53. That is a debit to the seller and a credit to the buyer. And next we're gonna see a ton of fees on the debit or subtraction column for the buyer. Now I'm not gonna go through all of these, but let me point out just a few worth noting. This $4,790 origination fee is points the lender is charging just to do the loan. Under miscellaneous, you'll see a rehab credit line of $79,500. This is the money needed to do the rehab. This right here of $1,178 is a 6-month insurance policy. And all of these lender fees, title fees, recording fees, insurance fees, etc. on the debit side add up to $166,959.54. But the credit side only comes to $150,538. So the buyer is short $16,421.18. So that is the amount due from the buyer not covered by the lender. So he has to bring that to closing or wire it to closing. Okay, let's quickly look at the seller side. The seller has a bunch of normal closing fees, and then there's the commission of $3,900 that's owed, so that's a debit or subtraction. So at the bottom, the total debits come to $4,878. So once you subtract that from the credit of $78,000, the total due to the seller is $73,121. Now again, if you are ever unsure about a fee or why you have to pay it, just ask your closing agent or lender for clarification. When it comes to wholesaling and flipping, some deals fall apart after escrow is opened and a closing agent starts working on a closing file. A common question I'm asked is, when wholesaling, if a deal falls apart after opening escrow, do you still owe the closing company money? Now this is a question you need to ask your closing company at the time of opening escrow. I would say something like, how do you handle it if during my due diligence I discover something that would prevent me from closing this deal? And see if they will expect some type of fee to be paid. But honestly, I have never once paid for a closing that did not happen. So I hope you learned a lot on this video and that you now understand how to read a closing statement. If you did, leave a comment and say, thank you, Jerry, you are a flipping genius. And if you haven't yet, be sure to subscribe to my channel. This is the #1 channel on YouTube for all things wholesaling and flipping, with over 500 videos all organized into a comprehensive library. In the playlist section, you have everything you need to become a bona fide flipping genius. Do that now, and I'll see you on the next video.